your future chartered accountants, and I hope you all are doing really great. So, since we have come to the end of this LVRC, and today we will be revising chapter number 9 and chapter 11, both very important chapters from your exam point of view, and also little threatening to the CA students. Why? Just because the chapter is lengthy. It is just not it might be lengthy, of course, but yes, if you break it into parts and revise the chapter in parts, like chapter 9, if you just think of revising few entities in a day, just one or two maybe, so that will make your chapter easy. Okay, and that will make your revision also worth doing. So, I would suggest, my dear students, to revise chapter number 9 in parts and not in one go. Obviously, once you are done with the parts thoroughly, and then a day before the examination, you have to since cover the entire chapter and in one go. So, after completing the parts, just try to compile the important questions, the MCQs, the mock test papers, the RTPs, and just see how the answers are written. And please try to write the answer and then practice, because writing is very, very important. You know how to start, how to end the answer. So once you are done with that, please practice all the questions properly. Likewise, in chapter number 11, break it into small essays, okay? And try covering SQC1 and SA 220 together, because then you will be able to differentiate between the two, okay? And that will make easy the content. It will be easy to remember as well as easy to revise also in future. All right. So with this little piece of advice, I would like to start revising first chapter number 11. Okay. So I hope you all are ready. Just start with question number 1. Sigma Limited has approached CGK and Associates to appoint them as the auditor for a period of 5 years in accordance with provisions of the Companies Act 2030. The prospective client company is new to the audit firm. So this company is new. Okay. Okay. Then SQC1 requires that a firm, before accepting engagement, should inquire vital information about the client, which helps them to decide about the integrity of the client. Okay. Apart from integrity, obtaining such vital information about client is helpful to audit firm in deciding which other matters. So the question is, this which other matter is also important apart from integrity, and also which matters would be considered by audit firm with regard to integrity. So one, integrity, and other than integrity also, which are vital important information. So we all know with regard to integrity, and before accepting the client, what information should you have beforehand? I told you, just gather the points. ICC, integrity, competence, and compliance with the ethical requirements. So once you know the points, then you can start elaborating and writing in your words. Okay. So let's see how the solution goes. Did you understand the question? The question is that the client is new to the audit firm, and before accepting, how it should take into consideration the integrity of the new client company as well as other matters which are vital for information as before accepting the audit. Okay, all right. So let's see how the solution goes. A firm, before accepting engagement, should acquire vital information about client, and such information should help the firm to decide about ICC. Integrity of the client, competence to perform engagement, means competence of the people within the engagement team, and again compliance with the ethical requirements. Okay. With regard to integrity, what are the things to be taken into account? The identity and business reputation. You should be knowing what business is it, what is the reputation, what is the credit worthiness, how is it be performing its business, how are the people, okay, who are the owners, who are the key management, are they people of good repute, are they respectable people, okay, or they belong to a Don company. So you should be having this into consideration. Then, what is the nature of client's operation? What business is the client performing? Okay. Then, information concerning the attitude of client's principal owners. How's the attitude of the owner? Is he humble enough? Will he tell us the entire information? Will he give us the information? Or is he, a little shrewd kind of a person or snob person who doesn't even talk to the auditor? And he will say, no, just see to your matter, auditor. It is not our business to tell you the information. So you have to see that also. Okay. Then whether the client is aggressively concerned with maintaining the firm fees as low as possible, means the client is just associated and he wants to get you engaged and pay you the least fee possible. Okay. So then you have to take into consideration, oh, will they give me very less fees? Can I accept this assignment or not? Okay. And then you have to also see, is the client involved in some business or criminal activity or some money laundering? Isn't it? What kind of a business? When you actually inquire about the business, then you should be knowing, oh, such wealthy people, from where are they getting so much of money? Are they involved into money laundering? So that also to be taken into account. And the most important thing, why are they appointing you as the new auditor and why not the previous auditor? Isn't it? The reason for the proposed appointment of the firm and not the reappointment of the previous audit firm. So this also you have to take into consideration. So what things will you take into consideration? Identity of the business, identity and business reputation, nature of client's operation, information about client's attitude, especially the principal owner, and whether the client is aggressively concerned in maintaining fees of the firm as low as possible. Is the client involved in money laundering or other criminal activities? And the reason for your proposed appointment and not the reappointment of the previous firm. Okay. So these things have to be taken into consideration. I hope the answer is clear and you are able to recall things. Isn't it? I told you how to remember this, Mr. Rao. Rao. R for reputation, O for operations, A for attitude. Mr. Rao wants to give you less fees. Why? Because he's involved in money laundering and you want to know the reason. Why is he appointing you as an auditor and not the previous firm? Okay? All right. So let's move to the second question. Second question goes, Deepa Limited initially requested an audit engagement for the financial year 23-24. Okay. However, midway through the audit process, the management claims that they are unable to provide complete supporting documentation for significant portion of their receivables. Okay. So, for their debtors, they are not able to give you confirmations. As a result, the management asked the auditor to change the audit engagement to review engagement. Oh my God, see what is happening. They are asking you to change the engagement. Why? Because they are not able to give you the entire information. They are saying, okay, auditor, leave. Do not do audit. No detailed audit work. Just do the review engagement. Just review our work. Just review the financial statements. Okay. Arguing that it would prevent the issuance of qualified opinion. Why? Because they are afraid that the auditor might issue a qualified opinion. Why? Because they are unable to provide sufficient and appropriate audit evidence, and to which the auditor think that those particular assertions are material and pervasive. So he will give a qualified opinion. So in order to save their report from being qualified, they're saying, oh, auditor, please do not audit. Just perform the review engagement. Okay. So now see what the question is saying. The auditor is now facing challenge in determining whether this change is justified or not. Comment in accordance with relevant essay. Okay. So now what should come into your mind? Immediately, engagement, audit engagement, essay 210, agreeing the terms of audit engagement. And there, there is a request from the entity to change the engagement. So there, what will the auditor do? The auditor will first consider whether the proposed change, is it justifiable? Is the request of the management justifiable? It is reasonable or it is unreasonable? If it is reasonable, there are certain grounds on which new engagement should be made or engagement should be changed. You remember new business, expansion, change in the key personnel people. So that all. Okay, and then you have to remember, if it is not reasonable, then what will happen? How will the auditor deal with it? He will see that is it possible the reasons are not justifiable. It is not reasonable for me to change. Then he will consider what kind of opinion would he give. Rather, he would also see to SA 705. Okay. So there you have to remember all these points into consideration, and then you start writing your answer. You know now SA 210 to be jotted. Then you have to understand where there's a request from the management for the change of engagement. The auditor will first assess whether the request of change, is it reasonable or is it not reasonable? Reasonable on what ground? Not reasonable. Then how should he go about it? Okay. So since this plan, this roadmap is clear in your mind, then you can start writing the answer. Okay. So here you go. How to write the answer? As per SA 210, agreeing the terms of audit engagement, a request from the entity for the auditor to change the terms of audit engagement may result from a change in circumstances affecting the need for the service. When can you change? Where you think there's a misunderstanding, there is a change, they do not understand the scope, the objective is not clear. In those cases, isn't it? A misunderstanding as to the nature of an audit as originally requested, or a restriction on the scope of audit engagement, whether imposed by the management or caused by other circumstances. The auditor considers the justification given for request, particularly the implication of a restriction on scope of audit. Is it going to be a restriction? Is it going to be a limitation on the scope of audit? This is what he has to see. Okay. So a change in the circumstances that affect the entity's requirement, or a misunderstanding concerning the nature of services originally requested, may be considered as reasonable. Now, what can be considered reasonable? This. Basis for requesting a change in the audit engagement. Contrast. Change may not be considered reasonable if it appears that the change relates to information that is incorrect. You know, they are saying you change, or otherwise unsatisfactory. An example might be where the auditor is unable to obtain sufficient and appropriate audit evidence regarding receivables, and the entity asks the engagement to be changed to a review engagement to avoid a qualified opinion or a disclaimer of opinion. Hence, Deepa Limited request auditor, the Deepa Limited's request to the auditor to change the audit engagement to a review engagement to avoid a qualified opinion or a disqualified opinion or a disclaimer of opinion is not reasonable. So here you have to tell that here the reasons are not justifiable. It is not reasonable on the grounds that just because they are not able to get sufficient and appropriate audit evidence, they want to change the audit engagement to a review engagement. Okay, so this is how you will conclude the answer. All right. Okay. Next question. This familiarity threats are self-evident. Okay, and occur when auditors form relationship with the client where they end up being too sympathetic to the client's interest. Now, this is the exact lines from your material which has been quoted here. Explain. The question is asking you to just elaborate and explain these lines. Now, you should be knowing what is familiarity threat and when can they occur. When can you see that a familiarity threat is happening? So, you know, who are you familiar with? I told you how to remember. Who are we familiar with? Our relatives, our partners, our associates, and from people from whom we accept gifts and hospitality. Okay. I told you, this is the way how you can remember. Okay. So here you have to first explain what is familiarity threat and when all can familiarity threat can occur. What are the circumstances where familiarity threat can occur? Okay. Just explaining these lines. That's it. Okay. So let's see how the answer proceeds. Familiarity threats are self-evident and occur when auditors form relationship with the client when they end up being too sympathetic. Okay. Just repeating. Okay. They occur in many ways, such as close relative of an audit work team working as a senior position in the client company. I told you the example that your relative, you are the engagement, yours is an engagement team, and a close relative of yours is working as a senior in the senior position of the company. Okay, maybe your brother, he is the CEO of that client company. So here there's a familiarity threat. Okay, former partner of the audit firm being director or senior employee of the client. Here I gave you the example. Suppose there is ABC Limited. Okay, and Mr. C, he has quit this firm and he has joined XYZ Limited as a senior employee. Okay, or a director there. So what is happening? Your person has been associated with that client now, isn't it? He's a director there. So your former partner is a director there. So again, it is a familiarity threat that people known to you are working there. Okay. Long association between specific auditors and specific client counterparts means you have been so long in long association with that client that since 40-30 years, you are auditing their business. So this is how there's a long association. And also I told you, when you accept gifts and hospitalities from your client is saying, sir, I have a plant at Goa. Please come and stay with us, and we are giving you free air travels for you and your family, and also your kids are also welcome. We will make you stay in a 5-star hotel. You can enjoy the resort. We will take you out in the evening, and then. Okay, so what is happening? You are accepting gifts and hospitality from the client company. So there is again a familiarity threat. Okay, so provision of Companies Act 2013 regarding rotation of audit. That is why they have made this provision for rotation of auditor. Address these may vary. Familiarity threat. Such provision prescribe that auditor is rotated after a certain number of years so that auditor do not become too familiar with their clients. Okay, so this is how you have to write your answer. Okay, next question. CA Paris has accepted the audit of financial statements of an entity. According to standards on auditing, the auditor is required to send an audit engagement letter. Okay, what are the key areas that should be included in engagement letter? Under what circumstances is the auditor not required to record the terms of such engagement in such a written agreement? So two questions. What are the key areas, and when is the auditor not required? Okay, all right. So what are the key areas? The key areas which should be mentioned in your audit engagement letter is the objective and scope of audit. Very important. The main prime objective of audit. Okay. Then responsibility of auditor, responsibility of management. Then you have to see identification of AFRF, applicable financial reporting framework for preparation of financial statement. And what was the last point? Reference to the expected form and content of any report to be issued by the auditor, and the statement that there may be circumstances in which a report may differ from its expected form and content. Okay, so what were the 5 points? Objective and scope, responsibility of auditor, responsibility of management, identification of AFRF, and then reference to expected form and content of the report. Okay, see, this is how the answer goes. Key areas. Okay, then if law or regulation prescribed is sufficient, it's in sufficient detail the terms of audit engagement. They say when the law has prescribed the engagement, that this is going to be the content, then the auditor need not record them in written agreement, except for the fact that such law and regulation applies and that management acknowledges and understands its responsibility. They say that when is auditor not required to write it down in a written form, the engagement letter? When there is a law or regulation prescribed for the same. The law itself tells that these are the contents, these are the key areas. Okay, and also the management should acknowledge that it understands its responsibility. What are the responsibility? Presentation and preparation of the financial statement as per applicable financial reporting framework. Isn't it? Okay. Next question. Truthful Product Private Limited is engaged in trading stationery items. During the year 23-24, there was a huge fire in one storage location of the company, resulting in loss of inventory of 5 crore. Okay. As a result, the operations of a company were badly affected for about 2 months. Unfortunately, the insurance claim of the company was rejected due to certain defects in the policy issued, and loss was booked by the company in the year 23-24 itself. Okay. There was no change in the nature of business in relation to past year. Means the same business was carried on. The draft financial statement of a company reflecting following information is as under. So here they have given you a tabular presentation of revenues from operation in the year 22-23 and 23-24. Profit before taxation in figures for the year 23-20, 22-23 and 23-24. CAD, who has been appointed as statutory auditor for the past 3 years, has decided to rely upon the same test of details as performed in previous year. Okay. In the given situation, what is lacking on the part of auditor? Now, you tell me. There was a fire, okay, which has resulted in the loss of inventory for 5 crore. Okay. And the auditor is saying, I will rely on the same TOD, same test of details. What do we do in test of details? We compare. Okay. So he's saying no need. We will rely on the same test of details. Now they are saying, is the approach of the auditor correct? Is the auditor correct in this approach? No. He is lacking professional skepticism. He is not having that questioning mind to compare the 2 years. See, can you just tell from the figures what is the percentage of net profit in the first year and in the second year? Just read the question yourself, dear students. Just read it once yourself and understand. Just read what is it trying. They are just in detail we compare. Okay, we are analyzing properly. So what it is doing? He is not acting, or he lacks professional skepticism, because he is saying that I will rely upon the same test. No. What should happen? He should do additional procedures. Okay, he should alter, considering the changed circumstances, considering that there was a fire, and he may include substantive analytical procedures also to analyze why is the variations, why is such a variation happening, and he should seek explanation from the management regarding the variations. Isn't it? So he should revise the overall strategy, the overall audit plan, and see what are the reasons for such changes. Excuse me, or for such deviations. Isn't it? Just see the question yourself once. All right. So let's see how the answer goes. Maintaining professional skepticism throughout the audit is necessary. If auditor is to reduce the risk of overlooking unusual circumstances and using inappropriate assumption in determining the nature, time and extent of audit procedures and evaluating the results thereof. Okay. Here in the given situation, the revenue from operations of the company has increased from 80 crore to 100 crore, and also profit before taxation is also increased. Now you tell, how can the revenue increase in such a circumstances? Despite there was a loss of inventory. Okay. So you see, despite its operation being affected by fire for 2 months, despite of inventories to the tune 5 crores of the financial statement reflects increase in net profit from 7.5%. It was 6 divided by 80 into 100, that is 7.5% in the year 22-23 to 10%, that is 10 divided by 100. Okay. in the year 23-24. Thus, approach of CAD lacks professional skepticism. He failed to analyze and compare, isn't it? And ask question, how come, dear management, when you had so much of loss, how can your revenue increase? How can your profit increase? Okay, the stock going down and profit increasing. What is the matter? How come? Okay, so he failed to ask such questions. In spite of these unusual circumstances, the auditor decided to rely upon the same test of details as performed in the previous year. The nature and extent of audit procedures needs to be suitably altered considering the changed circumstances. He may include, again, see, substantive analytical procedures to analyze variations and seek necessary explanations from the management. In case of doubt about the reliability of information or indication of possible fraud, standards on auditing requires the auditor to determine what modification or addition to audit procedures are necessary to resolve the matter. Okay. CAD, the auditor of a listed company shall document the overall audit strategy, audit plan, and any significant changes made during the audit engagement to the overall audit strategy or the audit plan and the reasons for such changes. Now, the documentation part, okay, you can skip, but the rest of the thing, like performing other procedures and try to obtain explanation from the management, should be there in your answer. Is it clear to all of you? So basically they were trying to ask what is lacking on the part of auditor. So you should be quick to analyze anything from what your audit approach is lacking. So here the professional skepticism was lacking. The what was lacking? He did not ask question. He did not inquire. How come the net profit increased? How come the revenue increased? Okay. So you should be little vigilant while answering this question. All right. Okay. Next question. SQC1 requires assumption of leadership responsibility for quality within the firm. Are such leadership responsibility required for audit engagement only? Now, as soon as you see such a question and you know SQC1 is applicable firm-wise and not to audit engagement, it is applicable to all the engagements. Okay, so you should be quick to analyze ki no, it is applicable firm-wise and not to all, only the audit engagement. Who assumes such leadership responsibilities within the firm? Now, you should be knowing that the CEO of firm's managing partner assumes the ultimate responsibility for the firm system quality control. The entire firm's quality control, who is responsible? The CEO or the managing partner. Okay, all right. And they say how it is important for audit quality. So you say 3 questions here. Never skip. Always read the question again and again. Okay, like you see, is it required only for audit engagement? You know, SQC1 applicable firm-wise. So not only audit engagement, but other audit engagement. Who assumes such responsibility? The CEO or the managing partner. Okay, then how is it important? Now you will say, how is it important? Because so as to maintain the quality of audit work. Okay, so as to encourage the inner culture that recognizes high quality audit work. Okay, so let's see how the answer goes. Start your answer with SQC1. Let the examiner know that you know as it is written in the question. See, many a times you will get the question itself mentions the standard. So never fail in at least that circumstance to copy the standard as it is. Never fail, because that makes your answer, that beautifies your answer. It adds value to your answer. Okay, all right. SQC1 requires firm to establish policies and procedures designed to promote an inner culture based on the recognition that quality is essential in performing engagements. Therefore, such leadership responsibilities are required for all engagements and not audit engagements only. Okay. Now, first part over. Second part. Such policies and procedures should require, now you see how the answer is written. As soon as one part is over, they have left a line and they have written from the next line. Likewise, you have to answer. Change the para. Change the para, also leave a line. Because when you leave the line, it shows that you are attempting another part of the question. And also that you are confident that you are not skipping any part of the question which has been asked to you. Okay, so I always tell you, even if you're writing second point, when there's a pointer answer, then you're writing another point, leave a line before each and every point. Leave lines before the points. Okay, and also when the question demands another part, leave a line and then start the second para. Okay, okay. So such policies and procedures should require the firm's chief executive officer, a firm's managing partner, to assume ultimate responsibility for the firm's system of quality control. The example set by the firm's leader encourages an inner culture that recognizes high quality of work. Further, persons assigned operational responsibility for the firm's quality control system by the firm's CEO or managing partner should have sufficient and appropriate experience, ability, and necessary authority to assume the responsibility. Okay? All right. I'm giving you time. Just go through the second para of the question and see how have they answered. They have first told who takes the ultimate responsibility and also why is it important. Again, that inner culture that recognizes high quality of work, you can again start with a next para if you wish to. Okay, always try to mention each and every part of the answer by leaving a line and starting with a fresh para. Okay, all right. Next question. CAH has been offered audit of financial statements of society engaged in promoting social cause, such as setting up of drug day addiction center for misguided youth and rehabilitating such young people by helping them find avenues of gainful employment. However, CAH failed to send the audit engagement letter to the society governing body and proceeded to conduct the audit. So you see what is the violation here? Without sending the audit engagement letter, he has just come and started the audit. Okay. In the absence of this letter, the governing body is of the viewpoint that the purpose of such an audit is to provide absolute assurance. This is the purpose of sending the engagement letter, because the overall objective of audit is mentioned there. That why is the audit being conducted? To obtain reasonable assurance. Isn't it? And now this management or governing body is under a misconception that absolute assurance will be provided. Okay. All right. Does this constitute a violation of fundamental principles governing professional ethics? State the reason for the same. Obviously, yes. What is happening? He is not acting ethically. Which of the following professional ethics is being violated here? Tell me, any idea? It is, what are the fundamental principles? First, let's revise. Integrity, objectivity, professional competence and due care, confidentiality, isn't it? And professional behavior. So what is happening here? It is violation of professional competence and due care. He did not bother, he did not care to send the engagement letter. Okay, he should be competent enough to send, or he should take due care while starting the audit. Professional, many of you might think professional behavior, not behavior. Behavior is associated with, like I gave you an example, that the CA is misbehaving. Here it is not the case of misbehavior. Okay, here it is a matter that he is not acting professionally. Okay, acting professionally means he is not taking due care. Before acceptance of audit, you should be careful enough to send the engagement letter. Okay, so he is violating the principle of PCDC, professional competence and due care. All right. Okay. So be very clear while mentioning the professional, which professional ethics. Okay, because here the examiner is testing on your knowledge of which principle are you picking up. Are you picking integrity? Are you picking objectivity? None of them. It is the professional competence and due care. Okay. So let's see. As per SA 210, agreeing the term of audit engagement, the auditor shall agree the terms of audit engagement with management or TCWG. The agreed terms of audit engagement shall be recorded in an audit engagement letter or other suitable form of written agreement. Such a letter includes objective and scope of audit of financial statement, like he writes, isn't it? That what is the objective? To obtain reasonable assurance that the financial statements are true and fair. Okay, all right. Then the auditor failed to send the engagement letter, and the governing body has formed an inappropriate view of the objective and scope of audit of financial statements. Okay, so by not following the requirements of SA 210, he is not following the requirement, isn't it? So he is violating professional competence. He is violating this SA. Okay, he is breaching that he has to send an engagement letter and he did not send. So he is not acting with professional competence. Okay, so he has violated principle of professional competence and due care governing professional ethics. This principle requires an accountant to attain and maintain professional knowledge. Why are they saying you attain and maintain? Because he did not know that he had to send engagement letter, or was he that carefree to send? So here he should be knowing. He was not aware of this, that he had to send. Either he was not aware of it. So he was lacking professional competence. He was not updated. Okay. And then if he knew and he did not, he was being careless. So due care. Isn't it? So both ways he is violating. Okay. All right. So this principle requires an accountant to maintain professional knowledge and skill at required level to ensure that client or employing organization receives competent professional services based on current technical and professional standard and relevant legislation, and act diligently in accordance with the applicable technical and professional standards. Maintaining professional competence requires awareness of current technical and professional standards. Not sending of engagement letters shows lack of awareness on the part of Mr. X, CAH, isn't it? He was not aware. If he was not aware, then he is lacking professional competence, isn't it? Therefore, he has violated said fundamental principle governing professional ethics. Which principle? Professional competence and due care. Did you understand the answer? Read it yourself once again. See if there is anything that you haven't understood here. See, you might get confused. That is why I am saying you have to think very clearly that if he is not sending, either he is not aware means not updated, professional competence. And if he was aware and he did not send, then due care was not exercised. Okay, professional behavior doesn't fit good here. Okay, because there is no misbehavior in this part. It is not acting professionally. Okay, all right. Okay, we come to the next question. See, Rohit is conducting the audit of Taste Limited, a food production company, for the last 2 years. Before commencing the audit for the year, he observed that the company has undergone a major shift in its product line by expanding in pharmaceuticals. Okay. Besides this, the company is now subject to new regulating reporting requirements. These developments were not present at the time of accepting the initial audit engagement. So, when the initial engagement was accepted, these things did not happen. Means there was no shift in the business, there was no regulations, new regulations. So, these things happened after accepting. Okay. Examine whether the viewpoint of CA Rohit is appropriate in accordance with the, okay, CA Rohit is of the view that there is no need to issue a new engagement letter. Why is he being so uh, careless and lethargic? We fail to understand. Examine whether the viewpoint of CA Rohit is appropriate in accordance with the relevant standards on auditing. So you should be knowing this, okay? That when do you issue a new engagement letter? Huh? When you think that the entity has misunderstood the objective and scope. There is a revision in the special terms of audit engagement, or there was recent change in the senior management, the owner has changed, the senior management has changed, or what happened, there's a significant change in the nature and size of business, the business has expanded or diversified, there's a change in legal and regulatory requirements. So here both these things are fulfilling, isn't it? There was a significant change in the nature and size of business also, and also there was a change in legal and regulatory requirement. What were the other points? There was change in the financial reporting framework, isn't it? And change in other reporting requirements. So these were the 8 points that were taught to us, isn't it? Let's revise once again. Indication that the entity has misunderstood the objective and scope. Second, revision or special terms of audit engagement. Change in the senior management, change in the ownership. Significant change in the ownership. Then significant change in the nature and size of business. Change in the legal and regulatory requirement. And the last was, change in financial reporting framework. And the last was change in the other reporting requirements. So these were the 8 points that we had studied. Okay. So now let's see, and you have to also mention that yes, CA Rohit was not correct in his approach, because since there was a expansion of business, there was a major shift in the product line. So again, new engagement letter had to be sent. Also, there was new regulatory reporting requirements. So both these conditions were there. So there was a requirement to send a new engagement letter, which CA Rohit did not send. So it was wrong on the part of CA Rohit. He should have sent the revised audit engagement letter. Okay. All right. So this is how you will write. Let's see. So you say lots many questions from essay 210. Just understand the weightage and importance of this essay, isn't it? Okay. As per essay 210, agreeing the terms of audit engagement, recurring audit in an audit which is performed by an auditor over years. In case of recurring audits, the auditor shall assess whether circumstances require the terms of audit engagement to be revised and whether there is a need to remind the entity of the existing terms of audit engagement. The auditor may decide not to send a new engagement letter or other written engagement each period. However, the following factors may make it appropriate to revise the terms of audit engagement to remind the entity of existing terms. So what are the conditions where you need to revise the audit engagement letter? Number 1, any indication that the entity misunderstands the objective and scope of audit, any revision or special terms of the audit engagement, recent change in the senior management, significant change in the ownership, significant change in the nature or size of the entity, change in legal or regulatory requirement, and a change in financial reporting framework adopted in the preparation of financial statements. And the last is change in other reporting requirements. So here in the given case, Taste Limited, a food production company, has undergone a major shift in its product line by expanding into pharmaceuticals, and the company is also subject to new regulatory reporting requirements. In view of the above mentioned factors, it is appropriate to revise the terms of audit engagement in accordance with essay 210. Thus, the viewpoint of CA Rohit regarding no need for issuance of new engagement letter is not correct, isn't it? So, CA Rohit is required to send a revised audit engagement letter. So, this is how you will write the answer. I'm giving you a minute to just see how the answer is written. This is how, so here out of 8 points, you should mention at least 5 to 6 points. Okay, just see for yourself. Seen all of you? Okay, let's move to the next question. CA Sudhakar has been appointed as the auditor of Amro Limited. Before accepting the appointment, he learns that his cousin, who held share in the company, has recently passed away without children, and he has named him as the nominee of these shares. So what has happened? His cousin has passed away, and since the cousin did not have any legal heir, he has named CA Sudhakar as the nominee of these shares, which have substantial value. Although holding such shares through a distinct relative does not violate legal provisions or affect his independence, this unexpected inheritance places him in dilemma. Means whatever company he is going to audit, this Amro Limited, his cousin has transferred the shares in his name. So what has happened? So he, by nomination, basically, by nomination, he has got the shares. So what should be done? Should he accept these audit or not, the audit of this company or not, where he's having some financial interest? Obviously, he's having a financial interest, isn't it? Because he's holding shares. So the question is, advise CA Sudhakar on how he should deal with such a situation and safeguard his independence. Now you should be knowing what kind of threat is there. So out of the threats, what were the threats? Self-interest threat, financial interest, advocacy threat, familiarity threat, isn't it? So you should be knowing which is the threat, correct threat here. Intimidation threat, what kind of threat is here? So you know when something monetary is involved, some money matter is involved, it is the financial interest. So you should be knowing that which interest is involved, financial interest. Okay, because it is in the nature of self-interest. Huh? So self-interest threat is there, isn't it? So though he has come to hold the shares by nomination, what is having? He's nominated, so by nomination he has got the share by a distant relative, but still before accepting he should make sure that there is no threat to independence. So what should be his approach? Should he accept? So we know if there is a threat, you should first try to eliminate the threat, isn't it? You should try to reduce the threat to an acceptably low level. And if that is not possible, then what should you do? You should not accept the appointment, isn't it? So he should take steps to eliminate the threat. How? By selling the shares. He should dispose of the shares. He should not hold the shares in the first place. He said, no, now I'm independent, isn't it? Immediately before accepting the appointment, he should sell away the shares. And if he cannot, he should not accept the appointment, isn't it? So this is how you are going to write the answer. Just read the question yourself. Try to figure out what all things can you write. So you should be knowing which threat is there. There is a self-interest threat. How? Due to nomination. So where he should remain independent, there is a threat to independence. Okay. Now you should take safeguards. To address this, what should you take care of? Because for the public to have confidence, the author should always appear to be independent. Okay, so before accepting any work, he should see whether there is any involvement of threat. If the threat exists, he should either desist from the task, he should not accept, or eliminate the threat at a very least. Put place safeguards reduce the threat to acceptably low level. When all such measures need not be recorded in form, he can serve as evidence of compliance with due process. Isn't it? And if the auditor is unable to fully implement, he must not accept the audit work. So here you should say that that CS Sudhakar should take steps to eliminate the threat by selling the shares immediately before accepting the appointment. And in the absence of the same, if he is not able to sell the shares, he should not accept the appointment as auditor. Okay, so let's see how the answer goes. In the given situation, holding shares by C.A. Sudhakar involves a financial interest in the company, as is in the nature of self-interest threat. Though he has come to hold shares due to nomination made by his distant relative before accepting the appointment. Now they are telling generally that CAs have a responsibility of remaining independent by taking into account the context in which they practice, basically the threats to independence and safeguards available to address the threat. Safeguards are actions, individually or in combination, that the professional accountant takes that effectively reduce the threat to comply with fundamental principles to an acceptable level. Now, to address the issue, following principles are to be applied. Now, in the answer, they have written these things. How can you go about it? Isn't it? Because they are things which are repeated. So, see, whenever an answer is given to you by the institute, it's not that you have to ditto copy the same. No. They wish to tell you that this is how answer should be written. You should be knowing the keywords, you should be knowing the terminologies, you should be knowing what content to write. Okay, like here they have given to address the issue, the following guidance principles is to be applied. What all points have they mentioned? For the public to have confidence in the quality of audit, it is essential that auditors should always be and appear to be independent for the entity that they are auditing. This we have already mentioned. Second, before taking up any work, an auditor must consistently consider whether it involves threat to his independence. This also. So you have to take right step by step. That first he has to see that is there any threat to independence? If yes, how will you do it? He should first desist from the task. He should eliminate the threat to a low level, and if to an acceptably low level, and if not possible, he should not accept the appointment. Even if you write that much content as a content, that is fine, and then you tell what is the threat, financial self-interest threat. Why? Because there's a financial interest involved. And what now you discuss what happened in the above case. Okay, so even if you write that much content, you will be awarded marks. Okay, all right. See, in the next line they have written, where such a threat exists, the auditor should either desist from the task or eliminate the threat, or at very least put in place safeguards that reduce the threat to an acceptable level. All such safeguards measure the need to be recorded in form that can serve as evidence of compliance with due process. Okay, if the auditor is not able to fully implement credible and adequate safeguards, he must not accept the work. You need not write exact the same language. Are you understanding, students? But what you should be writing? What is the threat involved? How should an auditor deal with the threat? Are you understanding this much, which what we have discussed? So these points are mentioned repeatedly for you to read again and again so that it is settled there. Okay, now coming to the conclusion. What is the case demanding? It says, considering the above scenario, holding the shares of the same company for which he is being offered appointment as auditor constitutes threat to his independence. What threat? Self-interest threat. Therefore, C.A. Sudhakar should take steps to eliminate the threat by selling the shares immediately before accepting the appointment. And in the absence of the same, he should not accept the appointment as auditor. So this is how you should know the hierarchy of writing. What should be written first? What kind of threat? How was it obtained? By due to nomination. Okay, then you repeat what was the content. how to deal with the threat, what safeguards, what measures an auditor should take, and then coming to the conclusion. Okay, so that much content if you write, you get good marks. Okay, all right. So I'm giving you time, just go through these points once again. See these points. Read the question and look at the answer once again yourself. All right, coming to the next question. Again, it's a repeated question. Just read it once. Again, a question whether there was a need to issue new audit engagement when there was a major shift in the production line and there was a new regulatory requirement. Exactly the same question. Okay. So I'm not taking up this question again because it's a repeated ditto question we have done earlier. All right. Next. Luck Limited, a mid-sized manufacturing company, has approached CAS, a qualified chartered accountant, to conduct the audit for the financial year ended 31st March 25. The company requests CAS to give acceptance for the audit so that audit can be commenced within time. Okay. So, with reference to SA 210, how the auditor will establish whether the preconditions for the audit are present or not? Nice question. Preconditions, you know what are the preconditions? So you first recollect the preconditions. You have to determine whether financial reporting framework is acceptable or not. Okay, then you obtain agreement of the management that it has acknowledged and has understood its responsibility. For what? For the preparation of financial statement as per AFRF. And what in addition? That the internal controls has been exercised by the management. They have used the internal controls for preparation of financial statements that are free from material misstatement either due to fraud or error. And what next? They will also provide the auditor with access to all the information, any additional information that the auditor may request, and they will also give him unrestricted access to people within the entity to obtain necessary audit evidence, isn't it? So when you know this much content, it becomes very easy for you to write. Preconditions, immediately, what were the preconditions? Okay, all right. So let's see how the question goes. In order to establish whether the preconditions were present or not, the auditor shall determine whether the financial reporting framework is acceptable. He should obtain agreement from the management that it has acknowledged and understand its responsibility for what? For preparation of financial statement in accordance with applicable financial reporting framework. Isn't it? And for such internal controls as management consider necessary to enable for the preparation of financial statements that are free from material misstatement, either due to fraud or error. They will also provide the auditor with access to all the information for which management is aware that is relevant to the preparation of financial statements, such as record, documentation, and other matters. Any additional information that the auditor may request from the management for the purpose of audit. And last but not the least, unrestricted access to people within the entity from whom the auditor determines that it is necessary to obtain audit evidences. Okay, so let's recollect once again what were the two preconditions. Basically they were two, isn't it, which has been divided into three. First, second and the third point goes hand in hand, isn't it? So we had said two. What were they? Determine whether the financial reporting framework is acceptable. Obtain agreement from management that it acknowledge and understand its responsibility for what? Preparation of financial statement as per applicable financial reporting framework. for internal control being used for the preparation of financial statements that are free from material misstatement, whether due to fraud or error. Then what other things? To provide auditor with access to all information, additional information that the auditor may require, and unrestricted access to people within the entity which the auditor thinks is necessary to obtain audit evidence from. Isn't it? Okay. Next question. Messrs. ABC and Company Chartered Accountants have been appointed as the statutory auditor of DEF Limited, which is a listed company for the financial year 24-25. CAX, a seasoned chartered accountant for over 15 years of experience, has been assigned as the engagement partner for audit. Okay. CAX takes the responsibility for maintaining overall quality on this audit engagement in accordance with SA 220. Since it is only audit engagement, it is relating to SA 220 and not SQC 1, isn't it? Okay. What do the actions of engagement partner and appropriate message to the other members of the engagement team in taking responsibility of the overall quality of audit engagement emphasize? So what does it emphasize on? What does the action of engagement partner and what message does it emphasize on? It emphasizes on the importance of audit quality. It emphasizes that your work, it complies with the professional standards and legal and regulatory requirement. It complies with the firm's quality control procedures and policies, and issuing auditors reports that are appropriate in circumstances. The engagement team's ability to raise concerns without fear, isn't it? And the fact that quality is essential in performing the audit engagement. These were the points that we have done, if you remember, isn't it? So, what were the points? Importance of audit quality in performing the audit that complies with professional standards, complying with the firm's quality control procedures and policies. Auditors issue the report that are appropriate in circumstances. Engagement team's ability to raise concern without fear, and the fact that quality is essential in performing the audit engagement. So these were the points that we had covered, isn't it? Let's see how the answer goes. As per SA 220, quality control for an audit of financial statement, leadership responsibility of an engagement partner is to take responsibility for overall quality on each audit engagement. The actions of engagement partner, CAX, and appropriate message to the other members of the engagement team is taking responsibility for the overall quality on each engagement and emphasize on the importance of audit quality in performing the audit work that complies with professional standards and legal and regulatory requirement, complying with the firm's quality control procedures and policies, issuing auditors report that are appropriate in circumstances, engagement team's ability to raise concerns without fear, and the fact that quality is essential in performing the audit engagement. Isn't it? So this question is a little different, but you should be knowing how to write such questions, isn't it? Just read the question once again. I'm giving you time to analyze the question. They are asking about the actions of engagement partner and what message do they want to convey to the other engagement team members regarding the responsibility of the overall quality. Isn't it? So this is the answer. So you should keep in mind that these points, they focus on how the engagement team will take the responsibility for the overall quality of each engagement, isn't it? The same points have been mentioned in your study material as well. Okay. Should we come to the next question? Okay. All right. CAH is managing partner of HK and Company, a chartered accountant firm having registered office at Delhi, with the annual task of reviewing whether any threat is observed in the firm or not. CAH noted down the following observations received from staff and partners of the firm for the financial year 23-24. Okay, so let's see how the question is going. It says CAJ, these are the points where you have to see which type of threat to independence is there in each of these observations and each of these situations. Number one, CAJ, a partner of the firm, performs statutory audit as well as non-audit engagement of Messrs. Takeaway Private Limited. Now, I will go point by point. Okay, just see the last line of the question. It says you are requested to help CAH in classifying the type of threats to independence in each of the following observation received from the staff and partners of the firm. Okay, so basically there are six situations given to you where you have to identify what type of threat it is. Since in the first case you see that non-audit engagement as well as the statutory audit engagement are going hand in hand. What is it violating? What is it violating? It is violating the checker concept, isn't it? Violating the self-review. What threat it is? What threat is it? It is the self-review threat, isn't it? Non-audit engagement and as well as the audit engagement. So will you ever tell as an auditor that yes, there was a mistake here? You are reviewing your own work, maker checker, isn't it? So it is a self-review threat. Is it clear to all of you? Hope you have understood this. Okay, next. CAM, partner of the firm who has done the income tax audit of Messrs. Happy Associates, wherein CAM has material significant indirect financial interest. Either indirect financial interest or financial interest. If whatever kind of financial interest it is what kind of threat? It is self-interest threat. Isn't it? Financial, wherever money matter is involved, self-interest threat. Isn't it? Okay. Next. The cost of air travel and stay accommodation of family member of audit team for audit of Chennai, was borne by the client stationed at Chennai. So what kind of threat it is? Just now we did, isn't it? Gifts and hospitality. So your air travel and stay accommodation being given, it is a familiarity threat, isn't it? Okay. One of the clients, Messrs. Chalk Limited, threatened to replace them as auditors because the audit team insisted to make provision for expected credit loss which the company was not willing to provide. So they're giving him warnings. We will replace you. They are threatening the auditor. So what kind of a threat it is? It is intimidation threat. It is intimidation threat when you are being threatened. Isn't it? Okay, then. CAN, partner of the firm who audited Messrs. NM Private Limited, became arbitrator for dispute between Messrs. NM Private Limited and one of its vendors. You were the auditor also, and now you've become arbitrator. You're taking side of your client. You're taking side of your client. So what is happening? It is what kind of a threat? It is advocacy threat. When you are taking side of your client, you're becoming the arbitrator also. It is the advocacy threat, isn't it? Okay. And the last, CAN accepted the assignment of tax audit of TRF Industries. Management agreed to pay him contingent fee for tax audit. Contingent fee, again fee. So, when fee is involved, there is a financial interest. Isn't it? Monetary matter, financial interest. So, what kind of a threat? Again, self-interest threat. Isn't it? So, here, in each case, in each such threats exist, you should, what should the auditor do? Okay. So, the first part, they are asking that what kind of a threat is that? You have to answer. And also, they are asking the second part. Do not skip this part, dear students. Again, I am focusing. Again, the second part of the question is, what should you as an auditor do? So, you tell the point by point, you mention the threats, and then you must tell that if the threat exists, the auditor should either desist from the task, eliminate the threat to an acceptably low level, isn't it? And if it is unable to fully implement credible and adequate safeguards, means if he is unable to eliminate the threat or reduce it to an acceptably low level, he must not accept the work. Isn't it? This is how you will write the answer. So let's see. Okay, they have made this chart and they have explained each and every situation. Alternatively, what can you do? You can write number 1 and you can write in a para also. Okay. That in the given case, CAJ, partner of the firm, performs statutory audit as well as non-audit engagement for Takeaway Private Limited. So here, what kind of a threat is involved? It is self-interest threat. Second, M, partner of the firm who has done the income tax and has material significant indirectly financial interest. So, self-interest threat. The cost of air travel and stay accommodation of family members borne by the client stationed at Chennai, familiarity threat. Okay. So, you can either mention the case, put a dash and write the threat, or you can explain in para also. Alright. Okay. But do not forget to mention the point. Point number 1, explain, leave a line, then point number 2. Leave a line, then the third answer. Okay. Okay. One of the clients, Chop Limited, threatened to replace them as auditor because of the audit team insisted to make provision for expected loss, which the company was not willing to provide. Intimidation threat. Okay. CAN, partner of the firm who audited, now became the arbitrator for dispute between NM Private Limited and one of its vendor. Advocacy threat. And again, in the last case, when he has agreed to pay him contingent fee for tax audit, it is again a self-interest threat. Second part of the question. When such threat exists, the auditor should either desist from the task or eliminate the threat, or at very least put in place safeguards which reduce the threat to an acceptable level. All such safeguards measures need to be recorded in a form that can serve as evidence of compliance with due process. Okay. Then second point, and if the auditor is unable to fully implement the credible and adequate safeguards, he must not accept the audit. So these 2 points, even if you write that he must try to eliminate, desist or eliminate the threats and take safeguards to reduce the threat to an acceptably low level, fine enough. Okay. Second, if he is not able to apply safeguards and reduce the threat or eliminate it to an acceptably low level, he must not accept the assignment. That will also be correct. Is it clear to all of you? Okay. Next question. Identify and explain the fundamental principles being referred to in the following cases. Okay. Number one, professional accountant should act diligently in accordance with applicable technical and professional standard while providing professional services. And number two, a professional accountant shall not knowingly be associated with reports where he believes that the information contains a materially false or misleading statement. Now, again, there are statements given and you have to identify which fundamental principle is being talked of here and you have to explain that. Can anyone tell me, number one, what does it mean? Which fundamental principle is it talking of? We have just done in the previous question. It is talking of professional competence and due care. And the second one is talking of integrity, where he should be straightforward and honest, thereby saying that he should not be knowingly associated with reports that he believes that information contains are materially false and misleading. Isn't it? That is why he is holding that integrity. He should not accept or he should not be associated with such kind of reports. Okay, and then you have to also explain these points in 3 to 4 lines. Okay, let's see how the answer goes. Number one, act diligently in accordance with applicable technical and professional standard. In the given case, professional competence and due care fundamental principle is being referred to. And a professional accountant shall comply with the principle of professional competence and due care, which requires an accountant to attain and maintain professional knowledge and skill at level required to ensure that the client or employing organization receives competent professional services based on current technical and professional standard and relevant legislative. So he should act diligently in accordance with technical and professional standards. See, even if you do not write to the point, it is perfectly fine if you explain the point and you're able to analyze or judge which professional ethics is being mentioned here. And you explain them. Okay. Next, a professional accountant not knowingly being associated with reports where he believes that the information contains materially false and misleading statements. In this case, integrity fundamental principle is being referred to. It prescribes that professional accountants shall comply with the principle of integrity. Now, what does integrity require? It requires the accountant to be straightforward and honest in all business and professional relationship. Integrity implies fair dealing and truthfulness. Okay, so these words, straightforward, honest, fair dealing, truthful, these words have to be specifically mentioned there in your answer. Likewise, in the above point, professional competence and due care, you should write act diligently in accordance with technical and professional standard. Again, this line has to be mentioned there. So you see that you write keywords, you explain the point and you get marks. Okay, I hope this answer is clear to all of you. Next question is again a repeated question where they have asked to explain what are the contents of audit engagement letter. What we have done. Again, let's revise. What are the contents? What should an audit engagement include? Objective and scope of audit of financial statement, responsibility of auditor, responsibility of management, indication of applicable financial reporting framework for the preparation of financial statement, and reference to the expected form and content of any report to be issued, and which may also, if it differs, the expected form and content of the same. Isn't it? So see, it was a repeated question discussed again. Okay, and now coming to the last question of this chapter. CAP, a professional accountant in service. In terms of employment and professional relationship with employer, he has to be alert to the possibility of inadvertent disclosure of any information outside the employing organization. However, in view of disclosure required by law, CAP has to divulge the information and document as evident in course of legal proceedings whether P has violated any of the fundamental principles governing the professional ethics in this case. Explain. So what is the question demanding? It's saying that P is required in the process of some legal proceedings to disclose information of his client, isn't it? And where which principle, fundamental principle is coming into your mind? Which fundamental principle is coming into your mind? Can anyone tell me which fundamental principle? Confidentiality, isn't it? Whereby a CA is not required to disclose information collected from in the course of his professional assignment from his client. But what are the exceptions? When it is permitted by law and authorized by client, where there is a professional duty or right to disclose, and when not prohibited by law. So here what is happening? Here it is his professional duty to disclose. There's a legal proceeding, okay, and he has to disclose. So they are asking, is there a violation of confidentiality in this case? Definitely not. There is no violation because in this case, P was supposed to disclose the fact, isn't it? Okay, so let's see how the answer goes. Confidentiality principle requires a professional accountant to respect the confidentiality of information acquired as a result of professional or business relationship. Confidentiality serves the public interest because it facilitates free flow of information from professional accountant client or employing organization to the accountant with the understanding that information will not be disclosed to third party. This is what confidentiality says, isn't it? So you first explain what is confidentiality, then you say such confidentiality may be disclosed when required by law, permitted by law and authorized by client, and where there is a professional duty to disclose and what not prohibited by law. So in the given case, we had to divulge the information and documents as evidence in the course of proceedings because it was required by law, isn't it? Therefore, P will not be held responsible for violation of fundamental principle of confidentiality governing professional ethics, isn't it? So this is how you will write your answer with respect to confidentiality. Okay? Every time it is not that the CA is wrong or the auditor here is wrong. You have to use your brain and write answer likewise. Okay, so I'm sure these questions are going to help you in your revision. These questions will be uploaded on the portal very soon, and then you can read them, go through the answers, and again if you have any doubt, please feel free to contact us. We will be ready to help you. Okay, so I guess these questions are clear to all of you. Anyone, any doubt can ask me. Okay. All right. So I can assume your chapter 11 revision is complete, and we will take a break and we will be back by 7:30 to start with the second chapter, that is chapter number 9. Okay. Technical team, we are taking a break and we will be back by 7:30. Okay, thank you. Technical team. Is chapter number 9 visible on my screen? Chapter 9 is there, right? Okay. So should we begin? Okay. All right. Okay. So welcome you all after the break, and I hope that you must have gone through whatever queries you had in the meantime. Okay. If not, you will be given ample time. Go through the questions once again yourself and try to see if you have any doubt. You are free to ask. Okay. Okay, now let's start with chapter number 9, which is again a lengthy chapter, and students are very, very afraid of attempting the questions from this chapter. Like I told you, do these chapters and do this chapter in parts. Okay, and then try to compile, make short notes, revise from those notes. Okay, but never ever think of leaving this chapter because it consists of such small portions, and you never know, the easiest of the portion comes in the exam and then you end up leaving it. So your freebies in the examination goes for a toss there. Okay, so please do not leave these questions. Okay, all right, so let's start. Question number 1. No inspection under Section 79 of Multi-State Cooperative Societies Act 2002 shall be made unless a notice is given to multi-state cooperative society. Explain clearly when and how such inspection can be made. Also state the powers available to central registrar in this regard, along with the provisions relating to communication of inspection under the said section. So you know the question is coming is from section 79. You should know when can an inspection be made. Okay, how should it be made? What is the opportunity of being heard given? And then what are the powers available to central registrar? Okay, so just recollect those points again and see what all is asked in the question. Number 1, when? So you know, when the central registrar receives a request from 4 people, isn't it? Number 1, federal cooperative to which the multi-state cooperative belong is affiliated to, or creditors, isn't it? Then not less than 1/3 of the members of the board and not less than 1/5 members of the multi-state cooperative societies. So these are the 4 people from whom, if the central registrar receives the request, he can demand inspection, isn't it? So this is what it is written. See now, how? Either by general or special order in writing. General or special order in writing. He or in his behalf, he may authorize some person to order in writing to make such an inspection. Okay. And then to see into what? The constitution, working and financial condition of multi-state cooperative society. Why is this inspection being done? Okay. To look to the working and of the financial condition, isn't it? And then what is the opportunity of being heard? They say inspection cannot be made unless and until you give a notice of not less than 15 days to the multi-state cooperative society. So before holding inspection, prior to it, 15 days notice has to be served on multi-state cooperative society, without which you cannot demand inspection. Okay, so see what it is written here. When the central registrar, on request from these 4 people, federal cooperative to which this multi-cooperative society is affiliated to, creditor, not less than 1/3 of the members of the board, not less than 1/5 members of the multi-state cooperative society, by general or special order in writing, isn't it? No inspection shall be made unless a notice of not less than 15 days has been given to or served to the multi-state cooperative society. What are the powers? Again, the same as what the Companies Act says. He shall have at all times access to all books of accounts, papers, vouchers, securities, stocks, and other properties that the society may, in the event of serious irregularities discovered during inspection, and take them into custody, and shall have the power to verify the balance of the society. isn't it? What is it subject to? Subject to the general or special order of the central registrar to call a meeting of the society. He will call a meeting and then he will say to inspect the cash balance, isn't it? Isn't it? This is what we had studied, isn't it? The central registrar, by general or special order in writing, he will say to verify the cash balance of the society. Then what other part? Every officer or member of the multi-state cooperative society shall furnish information with regard to working of the society as the central registrar he may require. So likewise, if the central registrar is asking, they make information available to him, isn't it? Inspection, a copy of the report of inspection under this section shall be communicated to multi-state cooperative society within a period of 3 months from the date of completion of such inspection. So within 3 months, the inspection report will be handed over to the multi-state cooperative society. Okay, so you know how many questions, how many parts to it, who can make, how can make, opportunity of being heard means serving of 15 days notice, and what are the powers. So powers are same as that of the Companies Act. See, he shall all time have access to the books of accounts and papers, isn't it? And every officer of the company shall furnish information in this regard, and inspection reports will be furnished to the multi-state cooperative society within a period of 3 months, isn't it? So see, this is how the answer is being written. So you have to attempt all the part of the questions. When can he make the inspection? How can the inspection be made? When is the notice to be served, and what are the powers available? Okay, clear? Should we proceed to the next question? Okay. Okay, this question is audit against rules and orders aims to ensure that expenditure conforms to the relevant provision of the Constitution and of law and rules made thereunder. The job of audit is to see that these rules, regulations and orders are applied properly by subordinate authority. It is, however, not the function of audit to prescribe what rules and regulations and orders shall be made, analyze and explain. So we all know this, isn't it? That it is not the function of audit. He has to only see whether the orders have been applied and implemented by the subordinate authority or not. So what was audit against rules and orders? We have to see that the expenditure is done in accordance with the financial rules, regulations and order issued by the competent authority, isn't it? So it involves interpretation of constitution, statute, rules and regulations, and the final power of interpretation of these does not vest with CNAG, isn't it? And then we also studied that rules and regulations, these rules, regulations and order against which regularity audit is conducted, it falls under some category, isn't it? What were the categories? That rules and orders regulating the power to incur the sanction expenditure from consolidated fund of India only or state, isn't it? So that was called the contingency fund of India or of the state, isn't it? Then rules and orders dealing with mode of presentation of the claims against government. How are you going to present the claims? Withdrawing money from the consolidated fund, contingency fund, public accounts of the government of India or of the state, isn't it? Then we had also seen rules and orders regulating the conditions of service, pay, allowances, pensions of the government servants, isn't it? And what else did we see? It is the function of executive government to frame rules, regulations and orders, isn't it? Which is to be implemented or observed by the subordinate authority. The job of audit is not to see these rules and regulations. They have to see whether it is properly applied by the subordinate authority or not. Okay, so this is what you have to mention here. Is it clear? So once you have in mind what is to be written, you start writing the answer. So how does it go? It says audit against rules and orders. So you explain what is audit against rules and order. It aims to ensure that expenditure conforms to the relevant provisions of the Constitution and of the laws and rules made thereunder. It also seeks to satisfy that expenditure in accordance with financial rules, regulations and order issued by the competent authority. It is the expenditure is being made only when it is authorized by the competent authority. Okay. The audit of expenditure is of quasi-judicial type of work performed. What was quasi-judicial? I told you it acts like a court. Okay. Okay. It involves interpretation of constitution, statute, rules and regulations and order. However, the final power does not vest with the CNAG. These rules, regulations and order against which regulatory audit is conducted mainly fall under the following category. See, that the rules and orders regulating the power to incur and sanction from the consolidated fund of India or of state. Then mode of presentation, the claims against government, withdrawing money from consolidated fund, contingency fund, isn't it? Then rules and orders regulating the conditions of service, pay, allowances, pensions of government services. Then it is the function of executive government to frame the rules, and it is the duty of the auditor to only observe whether it is applied by the subordinate authority or not. The job of audit is not to see, it is not the function of audit to prescribe what such rules and regulations orders shall be. Okay. But it is the function of audit to carry out examination of various rules and to see that they are not inconsistent with the provisions of Constitution. They are consistent with the essential requirements of audit and accounts as determined by Comptroller and Auditor General. They do not come in conflict with the orders or rules made by the higher authority. And in case they have not been separately approved by competent authority, the issuing authority should be having the necessary power. Means they should be acting on behalf by this competent authority. Okay. So let's do the last portion again. The function of audit is to carry what? And to see that it is not inconsistent with the provisions of the Constitution. It is consistent with the essential requirements of audit and accounts. It do not come in conflict with the rules made by the higher authority. And in case it is not approved by the competent authority, the people authorizing it should have the necessary rule making power to do that. Okay. All right. Next question. Aman Cooperative Society appoints FAB and Associate as an auditor for the financial year 23-24. During the auditor noted the following details. Now, these are few details. Please see to them properly. The total number of shares are 1000 shares of 10 each. Net profit before transfer to reserve fund is 10,000. Net profit after compulsory transfer to reserve fund is 8,000. Mr. Dhairya, a member of society, holds 200 shares amounting to 2,000 from previous year. Upon verifying the society's borrowings, the auditor found that cooperative society had accepted a loan from Mr. Shivam, a non-member. The auditor did not find any restriction regarding this in the society's bylaws. So see, the first point is that regarding a shareholding by a member. Second, they say that a loan has been accepted from a non-member. Regarding these two transactions, they are saying comment on the above transaction of the society with reference to the Cooperative Societies Act. Now, unless and until you know the provision, like section 5, okay, what does it say? It says that the liability of member is limited, isn't it? It says that the liability of member is limited. Then no member of the society other than the registered society can hold portion of the share capital of the society as would exceed, there were two limits given, maximum of 20% of the total share capital or value of 1,000, whichever was higher we were supposed to consider that, isn't it? So here, what is happening? Here, Mr. Dhyara is holding 200 shares. So what is it? 10,000. There were total of 10,000 shares. Isn't it? See? So it comes to 20%, 2,000. The total shareholding is 10,000, 1,000 into 10. It comes to 10,000. Total sharehold value of shares is 10,000. So 10,000 or 20% of 10,000 is 2,000. So is Mr. Dhyaria allowed to hold a maximum of 100 shares in accordance with this act? Can he hold 200 shares here? Can he hold 200 shares? Tell me. Here a member is holding 200 shares from the previous year. In view of what the provision says, it says 20% of the total number of shares. What is the total number of shares? 1,000. So 20%, how much it comes to? And then it says 1,000, whichever is high, or share value of 1,000. So here he is holding share value of 2,000. Is it correct? He is allowed to hold maximum 100 shares only. Isn't it? So this is what, is it a violation? Yes, it's a violation here. Okay, so this is what you are supposed to write here. You write the provision. Okay, what is the provision? You tell that no member of a society other than registered society can hold such portion of the share capital of the society. That limit given excess maximum of 20% of the total number of shares or the value of shareholding to rupees 1,000. So here Mr. Dharia holding 2,000 shares is not proper. Mr. Dharia is allowed to hold maximum of 100 shares only. Okay? Okay. Next, they say upon verifying the society's borrowing, they say that there is no restriction regarding the borrowing in the society's bylaws. Now, there is a restriction on borrowing. Section 30, what does it say? That a registered society shall accept loans and deposits from persons who are not members subject to restriction and limits to of the bylaws. So, the bylaws of the society should mention the same. Okay, so the auditor should have to examine the bylaws. But here they say that the bylaws is silent. So, what will happen? What will happen? What will happen? There is no restriction regarding the acceptance of loan received from a non-member, Mr. Shivam, in the society's bylaw. So, the loan received from Mr. Shivam, is it permissible or not permissible? Since nothing is mentioned in the bylaws, it is permissible. Okay, it is there to confuse you. Since nothing is mentioned, the loan received from Mr. Shivam, who is a non-member, is permissible. Had the bylaws put restriction on the same, he would have not given loan. He would have not provided so. And this would be improper. Is it clear? So first case, what does it say? Let's see the solution. It says C. This is the provision. According to Section 5 of the Central Act, in case of a society where the liability of society is limited, member of a society is limited, no member of the society other than registered society can hold such portion of the share capital of the society as it would exceed a maximum of 20% of the total number of shares or a share value of rupees, a shareholding of rupees 1,000. Restriction on borrowing, Section 30, it says according to this section, a registered society shall accept loan and deposit from people who are not members subject to restriction and limits of the bylaws. So the auditor will have to examine the bylaws in this respect, and hence is your answer. Okay. So you have to mention that as per this, Mr. Dharia is allowed to hold only how much? Number of shares or value, total number of shares or value of shareholding to rupees 1,000 or 20% of the total number of shares. So here, what it is to be done? Mr. Dharya is allowed to hold maximum of 100 shares only. Okay. And here, Since the bylaws is silent, the loan received from Mr. Shivam is permissible. It is allowed. Clear to all of you? Okay, let's come to the next question. You are appointed as auditor of prestigious township club. As the auditor of the prestigious township club, what are the key points you would consider while auditing the income and expenditure of the club? Nice question. To the point question, isn't it? It is to the point question. You just have to write what are the things. Come on, quickly tell me what are the things. You will see to the entrance fees. You will compare it with the members application, isn't it? And also you will refer to the minutes of the managing committee. Okay. Then subscription. You will see the subscription with the counterfoil of the receipts and trace whether any subscription is due or not. You will reconcile the amount. Okay. Arrears of subscription. Whether any subscription are in arrear and whether they have been correctly brought forward or not. Then arithmetical accuracy, whether the total of the columns in the register, they tally together or not. Then irrecoverable members due, where the dues from the members have not been recovered or where they are in arrear, whether necessary steps have been taken to recover the same or not. Isn't it? And if the amount is irrecoverable, the same should be mentioned in the audit report that it is not recoverable, it has become bad now. Okay. Also to the pricing, where there was food stuff in the club, you have to verify the internal check as regard the members being member being charged with the food stuff, isn't it? Or any beverages being served to them. So fee chargeable for the special services rendered, such as you had tennis or you had some pool there, pool table. Okay. Then what else did you examine? You examined the members account. You will trace for the debit of selected periods from subsidiary ledgers and you will see account of every member has been debited with the amount recoverable from him or not. Isn't it? Then purchases with regard to the sport items, crockeries, etc., stationaries, trace their entries to their respective inventory ledger. Whatever inventory is mentioned there, you just verify the same, that whatever being the purchases being made, closing stock, is it matching with the inventory register of the said item or not. Then the margins earned, isn't it? Whatever profit, the margin the club is earning with regard to the purchase of food stuff, okay, or the beverages there. So you will also test their sale price to see that they are being served at the normal rate and no extra price has been charged from them. Also the inventory of the unsold stock. Okay, you should verify it physically and then you should check with the valuation done in the financial statements. Management power, you will see that secretary, is it bypassing it powers or not? Whether his power, what are the secretary, who has the financial power? The secretary. Whether is he surpassing that powers or not? Is that power being exceeded? Then report these matters to the managing committee. You will tell the managing committee, the secretary is acting in excess of his power. Okay, he has exceeded his powers. So these are the matters you have to take into account. So out of those 10, 11 points, even if you write 7 points, it is good enough. It is good enough. For 5 mark, write 6 to 7 points. Okay, so let's see how the answer goes. See, they have also mentioned in points the entrance fee. Entrance fee is the member application. You check with the counterfoil issued to them and the reference to the very important document. I told you I have made you the list of important documents. One was minutes of the managing committee, isn't it? Subscription. You check with the counterfoil, reconcile the amount due with an amount collected with the outstanding. You just reconcile the two. Arrears of subscription. You see whether the arrears have been correctly brought forward from the and the arrears for the year have been received in advance have been correctly adjusted. Isn't it? Two things we had to see, that previous year brought forward correctly and the current year adjusted correctly. Isn't it? Okay. Arithmetical accuracy, you check for the total. Irrecoverable members due. You see that arrears, you see what member dues are in arrear and inquire whether necessary steps have been taken for not for recovering the same or not. And if it is irrecoverable, you mention it in the audit report. Pricing. You check for the prices being charged and special services being rendered such as billiards and tennis, etc. Members account. You trace the debit for select period of subsidiary register from subsidiary register, maintain in respect of supplies and services to members to confirm that every account of every member has been debited with account recoverable for him. So in the ledger, members' name have been written and whatever amount has been recovered from them is mentioned. Purchase. You vouch for the purchase of sports item, furniture, crockery and trace the entries into respective inventory register. Margins earned with respect to the foodstuff, cigars, wine. Test their sale price so as to confirm that normal rates and gross profits have been earned on their sales and they have not been sold at a very extraordinary rate. Okay. All right. Then management powers. You examine that the financial power of the secretary and these have not been exceeded and if report the specific case for confirmation by the managing committee. Look for yourself these points. Direct question, straightforward question. All right, coming to the next question. While auditing the financial statements of Bro Traders LLP, CAL is carefully going through LLP agreement. Briefly discuss the key points CAL should pay attention with regard to the LLP agreement. Now, a page of your study material where audit of LLP was mentioned, isn't it? And you know the same ditto points of partnership firm were repeated. What were they? Nature of business, capital contribution, interest, duration of partnership, and what else? Drawings allowed to the partner, rights and duties of the partners, profit sharing ratio, any loans being advanced to the partners, what is the method of settlement between the partners when there is any case of admission, retirement, isn't it? Then borrowing powers of this firm, LLP, and then salaries and commission being payable to partners. So all these points ditto from your partnership firm. You remember? Now the same question could come in a form of your like LLP agreement, they ask for the partnership agreement. Okay? So in place of LLP, you will write partnership. Isn't it? So let's see the points. Nature of the business, amount of capital contributed, interest, duration of partnership, drawings allowed to partners, salaries, commission, etc. payable to partners, borrowing powers of LLP, rights and duties of partners, method of settlement of accounts between partners at the time of admission, retirement, etc. While any loans being advanced to the partners and profit sharing ratio. Now, they are also asking the reporting responsibilities of the auditor. So they say the reporting responsibilities is they has to mention, the auditor should mention whether the records of the firm, this LLP, appears to be correct and reliable, whether he has obtained all the information available with the explanation necessary for his work, and whether there was any restriction imposed on him or not, whether there was any limitation to scope of audit or not. Okay, so in reporting responsibility, we will write, he will mention whether records appear to be correct and reliable, he has obtained all the information and explanation necessary for the purpose of audit, and whether any restriction was imposed upon him, thereby restricting or putting a limitation on his scope of work. Clear? Should we proceed to the next question? All right. Section 72(1) of the Multi-State Cooperative Societies Act 2002 states that only person who's a chartered accountant within the meaning of Chartered Accountants Act can be appointed as auditor of multi-state cooperative society. According to section 72(2), who is disqualified for being appointed as auditor of multi-state cooperative society? So you should be knowing which people is disqualified or cannot be appointed as auditor of multi-state cooperative society. So you know that any body corporate is disqualified. Any officer or employee of multi-state cooperative societies act, same as your companies act going, huh? Person who's a member or who's an employment or officer of the employee of the multi-state cooperative society, or a person who is indebted to a multi-state cooperative society, or who has given any guarantee or provided any security in connection with this indebtedness of any third person to the multi-state cooperative society for an amount exceeding rupees 1000 rupees. This is the same as your Companies Act 2013 says, isn't it? So body corporate, officer or employee, person who's a member or who's an employee of an officer of an employee in the multi-state cooperative society, a person who is indebted to a multi-state cooperative society, or he has given guarantee or provided security of a third person with respect to this multi-state cooperative society for an amount exceeding rupees 1000 rupees. Are you able to recall these points or not? See, this is only possible only when you revise things again and again. You still have time, dear students. Trust me, you can finish revision and as well as your writing practice if you start even today. Okay, so please pull up your socks, see what are you left with, what else is to be revised. Look at all the questions of your RTPs, MTPs, must to see before the exams. And obviously these questions are uploaded on your portal. Go through them. Okay, it will boost your confidence. Appear for the mock test that the institute conducts for you. That will give you an environment of how you have to appear for your exam. Okay, all right, so let's see. These are the people: body corporate, officer or employee, person who's a member, who's in employment, or a person who's indebted, or who has given any guaranteed or provided any security in connection with this indebtedness of any third person to multi-state cooperative society for an amount exceeding rupees 1000 rupees. You see, multi-state cooperative society questions important, isn't it? All right. Next question. You are appointed as auditor of Messrs. Shine and Company, a partnership firm. During your review, you observed that the audit appointment was informal and was not documented properly. The firm started a new business activity which is not covered in the partnership deed. Major financial decisions were made without proper records. As an auditor, briefly explain the matters that should be specifically considered by you while auditing the accounts of partnership firm. Now, what are the matters to be considered? You have to first see the prime document, that is your letter of appointment. It has to be signed by the partners, isn't it? Which will clearly state the nature and scope of objective. Then partnership documents. What documents? The minutes of the meeting. Okay, the minutes relating to authorization of extraordinary and capital expenditure, whereby the matters related to raising of loan, purchasing of capital assets have been dealt with. Isn't it? Objective of partnership. What is the objective? Okay. What business in which the partnership is engaged is authorized by the partnership agreement. Books of accounts. You have to examine whether the books of account appear to be reasonable and adequate. Okay. And are they in relation to the nature of the business of partnership or not? Mutual interest. No partner has suffered prejudicially by the activity engaged in by the partnership. There should be no interest of such kind. It was not authorized to do so in the partnership deed, and there was a violation of such a provision. So this has to be mentioned. Then provision for taxes. Confirming that provision for firm's tax payable by the partnership is made before arriving at the amount of divisible profit. Before coming to that divisible profit amount, there should be a provision for taxation which should have been made. And last, division of profit. How the profits have been divided? Is it as per the PSR mentioned in your partnership deed or not? Okay, so let's quickly see what is mentioned here. While auditing the accounts of Messrs. Shine and Company, a partnership firm, it is important to ensure that they have a formal appointment. Deviation from the partnership deed and absence of document for key decision raise concerns about validity, transparency, and legal compliances. So, the auditor should give special consideration to the following matters. What are the matters? Letter of appointment, which should be signed by the partners, duly authorized, stating the nature and scope of audit. Partnership document. You study the minutes of the meeting, especially the minutes relating to authorization of extraordinary and capital expenditure, raising of loans, purchase of assets. Now see, specifically a question can come that there was a purchase of asset, okay, of a huge value. What things as an auditor should you verify? Again, you would write. Now you have to see how much marks does it carry. If it asks for more explanation, you will give the points. Otherwise, you will mention that minutes of the meeting is to be verified. Are you understanding, dear students? So this is how you have to be very keen when you revise your questions. You should be very alert what type of questions can come. Frame yourself. This question can be asked. This type of question can be asked. Like you see, these are the documents. Objects of partnership. What is the object? Is it mentioned in the deed or not? Books of accounts, whether they are reasonable and adequate or not. So these things come automatically. In this chapter, you have to just get into the shoes of the auditor. Okay, you have to get into the shoes of auditor and think you are an auditor and act likewise. Okay, then see, mutual interest, that no partner has suffered prejudicially by the activity engaged. No interest has been earned by them like that, which is not authorized to do so under the partnership deed or any violation of the provision in the partnership agreement. Provision of taxation, confirming that the provision of firm's tax payable by the partnership has been made in the accounts before arriving at the amount of divisible profit amongst the partner. And the last is division of profits. You verify whether the profits have been divided as per the agreed PSR mentioned in the deed or not. I'm giving you a time. Go through the points yourself. So out of these 7 points, even if you learn 5 or 6, it is fine. Okay. All right. A government department has been allocated a budget for infrastructure development. During the audit, the auditor observed the following. Okay. Number one, some payments were processed without proper approval from the competent authority. Okay. A large-scale project was implemented, but no assessment has been made regarding the expected benefits. Good question, huh? Funds were utilized from an account for which no budgetary provision was made. Certain expenditure were made without following the prescribed financial regulation, means laws and regulation not being followed. There were instances of unnecessary spending that did not align with the financial propriety mentioned there. Identify the different types of audit applicable to each of these observations. How are you going to write the answer? Point number one, you will write what kind of audit does it deal with, and then you will explain that. Like number one, some payments were processed without proper approval. Tell me which kind of audit. What audit is required here? Audit of sanction is required, isn't it? Because without proper authority, competent authority sanctioning the same, either special or general permission had to be given there, isn't it, for authorizing any expenditure. So here no approval means audit of sanction was missing, isn't it? Second point, large scale project was implemented but no assessment has been made regarding expected benefits. So you do not know whether it is achieved or not. So it deals with performance audit. How is it performing? You are not aware of. So how should be the performance? It should deal with the performance audit is necessary. Okay. Next, no budgetary provision was made. Funds were utilized from account. First, funds were utilized from account for which no budgetary provision against. Audit against provision of funds. Audit against provision of fund. Isn't it? Okay. Next, certain expenditure were made without following prescribed financial regulations. Audit against rules and order. Isn't it? And the last is instances of unnecessarily spending that did not align. What is it? What is it? Propriety audit, isn't it? Where you see that general principle of financial propriety is given due regard to, isn't it? Okay, let's see how the answer is written. The audit of government expenditure is one of the major components of government audit. The basic standards set for audit of expenditure are to ensure that these are in provision of funds authorized by competent authority, fixing the limits within which expenditure can be incurred. Okay. So when payments, number one, when payment are processed without proper approval from the competent authority, an audit of sanction is required. This ensures that it is a sanction either general or special. Small explanation, isn't it? Accorded by competent authority. Second, in case where large-scale projects have been implemented without any assessment, whether expected benefits were achieved or not, a performance audit is required. Programs, schemes and projects have been incurred and are being run economically as are yielding results expected from them. So whatever performance they expected of, they are following the same. Okay. So this has to be written likewise. Account for which no budgetary provision was made. Then audit against provision of fund is conducted. This ensures that there is a provision of funds out of which expenditure can be incurred and the same has been authorized by the competent authority. You see how in simple language they have written the answer. You tell what kind of audit and you explain it in a line or two. That's it. Okay. All right. Next. If expenditure are made without adhering to the prescribed financial regulations, an audit against rules and order is applicable, which ensures that expenditure incurred conforms to the relevant provisions of the statutory enactment as the law, as the rule, as the order says. Okay. Then, instances of unnecessary spending that do not align with financial propriety falls under the scope of propriety audit that ensures that the expenditure is incurred with due regard to broad general principle of financial propriety. Use your money as if you're spending your own money, isn't it? This is what we have remembered it as. Is it clear to all of you? Anyone, any doubt? See to the answers once again. How is it written? All right, coming to the next question. An NGO based in Kolkata collected significant donations for flood victim in Bihar. These funds were distributed to various NGOs operating in Bihar to support relief efforts. You have been appointed as auditor for this NGO accounts for the year in which it is collected and disbursed these donations. You have to draft an audit program to audit the receipts of donation and reimbursement of collected funds to different NGO. So here the question specifically asks about receipts of donation. How are you going to audit the same? So first you will see to the internal control system, isn't it? Whether there's a proper division of responsibility taking place or not. Okay, with respect to the collection being made. Second, custody of receipt book. Who is holding the receipt books? You verify them physically, checking the number of copies. Huh? Isn't it? Then, receipt of checks, where the checks have been received. You see that there is a carbon copy for duplicate receipts or not. Date of the check, what is the bank's name, the date, the amount should be clearly stated and should be signed by the responsible official, the competent person. Okay, then bank reconciliation. When do you prepare a bank reconciliation? What do? You see that all cash deposits are not only with reference to the date and amount but also with reference to the receipt book. This is what you have to check, isn't it? Then what will you see? The cash receipts. Cash receipts, you will cross check it with the amount mentioned there, the date and the receipt number, the serial number, is it matching? Then you will also see to the foreign contribution. They say special attention to the compliance with applicable laws and regulations will be taken into account in case of foreign contribution. And then you have to also see the remittance of donation to different NGO. How is the remittance being made? What is the mode of sending the remittance? How is it sent? Is it made through account paycheck? Is it made through demand draft? Is it made through NEFT? You have to see to the mode of sending remittance. You confirm the receipt, whether the receipt of remittance, is it supported by receipts and acknowledgement or not. Confirming it, that whether it is acknowledged or not. You identify the NGO to whom the donation is made. Is it genuine or not? Is it having the 80G registration number, etc. or not? Then direct confirmation. You call the NGO and inquire whether donations have been paid or not. Then donation confirmation procedures. You send confirmation of letters of confirmation and you inquire. Donation utilized. You see how much utilization of donation is being made. Is it being made only for this flood purpose or is it made for some other purpose also? Then you see what is the system of NGO selection. How is the NGO being selected? Is it being randomly by the system or any ad hoc basis to whom the donations have been sent? Okay, what is the method of system of NGO selection, the selection of the NGOs? Okay, so let's see how the answer is written. Number 1, internal control system. So you have to see particularly with reference to the division of responsibility in respect to the authorized collection. Safe custody of these receipt book, is it kept with the safe custody or not? You physically verify it, including checking of number of receipt books and sequencing on the same. Receipt of check. When the check has been received, you have to see details related to the check, bank's name, amount, and whether it is signed by the competent authority or not. Bank reconciliation. You will reconcile all the cash deposit, not only with reference to date, but also with reference to the receipt book. Cash receipts. You will vouch for the cash donation. Cross-check it by asking the entity to post a thank you letter mentioning the date and amount so that it is verified. The NGO will not give a thank you note to anybody like that, isn't it? So you are verifying. Foreign contribution, again you have to be seen to. Remittance, mode of sending the remittance, confirmation, identity, direct confirmation process. You see the donation utilization, whether it is utilized for that very purpose or some other purpose, and also the system for NGOs selection. Isn't it? In identity, you see the genuineness of the entity. Okay, whether a valid address is there or not, ATG registration is there or not. So all these things are to see the genuinity of the NGO, so that in case any fake NGO doesn't come up. Okay, all right. Next question is a repeat question from your partnership firm. So what all things have you to see? Same documents, huh? Letter of appointment, partnership documents, objects, books of accounts, mutual interest, division of profits, and provision for taxation. I'm not taking this question. It is a replica of what we have done. Okay. Next question. Messrs. P, Q and Company Chartered Accountants have been appointed as statutory auditors of CBD Multiplex Cinema Limited. The audit team started the audit and verified the ledger and other books of accounts for the financial year 24-25. However, one of the team members is of the view that internal control mechanism of the company should also be verified. Okay. So can you guide the audit team about the areas that will be covered in verifying the internal control? We had done this in detail, isn't it? I asked you to imagine that you are entering the cinema hall. Okay, so what things will you see? First of all, the entrance. By way of showing off, I said they are old dated, they are outdated, so you are showing the printed tickets. Otherwise, nowadays, what do? We show the QR scanner, we show the QR code, and then we scan it and we are allowed to enter. But little outdated people, they show the printed tickets. Okay, whether they are serially numbered or not, bound into books or not. Number of tickets issued to each show and each class. I told you, na, gold, diamond, silver, all these category. So they have to be shown separately, same day, each week, serially numbered. Then advance booking, a separate series of tickets are issued. Okay, and last, the inventory of the tickets is kept in the custody of responsible official or not. Okay, so let's revise quickly. The entrance to the cinema hall during show is only through the printed tickets, serially numbered, bound into books. That the number of tickets issued for each show and class are different through the numbers of same class of the show for the same day, each week, run serially. Advance booking, a separate series of tickets is issued, and for inventory of tickets is kept in the custody of responsible official. Otherwise, what will happen? They will tear the ticket and they will go and watch the movie. Okay. All right. So go to the go in details. See the points again. Printed tickets, entry, serially numbered, bound into books. Different class and different show tickets, and advance booking, inventory. These points you have to remember. Okay. Next question. Helping Hands Cooperative Society is working for the welfare of its members since last 10 years. Governing body observed that the society had some idle funds during the financial year 23-24 and is considering the equity market growth, decided to invest the same in the blue chip mutual fund. Decisions brought fortune and society earned a handsome return on the investment made. Auditor of the society, however, gave a qualified opinion. Management has hired you to guide why they went wrong, where they went wrong. Give your comment considering section 32 of the Central Act. So here you have to mention from where all or to which areas can these funds be diverted to, where can the investment be made, and is the investment in this blue chip fund permissible? It is not permissible. Okay, so let's see. As per section 32, society may invest fund in any one of the following. Where all can it invest? In the central or state cooperative banks. Any of the securities specified in section 20 of the Indian Trust Act Then shares, securities, bonds and debentures of any other society with limited liability. Again, any cooperative bank other than central or state, because that is covered up as approved by the registrar on specified terms and conditions, and any other money permitted by central or state government. So in this case, Helping Hand Cooperative Society has invested in blue chip mutual fund, due to which the auditor has given a qualified opinion. So can it invest in such a fund? No, it is not permissible. Okay, so this is what you have to write. Clear? Clear to all of you? Let's come to the next question. CAP was consulted by one of its friends, Mr. Robin, who informed him that he wants to enter into education sector and invest in one of the schools being operated in the city. The operations of the school were managed by Robin only, and the proposed investment will be made once CAP confirms that the revenue figures given to him by existing management of the school. CAP said that the main source of revenue of the school is fee from students, and that will be verified. Now, the question specifically asks you to write down the steps involved in verification of fee. Now, can you quickly recollect the points that we had done? You check the names entered in the student fee register. You check the fee received by comparing the counterfoil of the receipts with the entry made in the cash book, isn't it? Then you total up the column of the fee register for each month, that with the any money paid in advance, isn't it? And also arrears that are irrecoverable, that has to be written off. Okay, then you check the admission fee with the admission slip. Admission fee with admission slip signed by the dean or head of the institution. Okay, then you had to see the student, the free scholarship that was provided to the students or some concessional fee that was available to them. Okay, then you had to also see to the late fine for the late payment or absentees that have been collected, and hostel dues. Do you remember the hostel dues that were recovered from the students, and whether there were any caution money to be refunded or not? Do you remember these points? So these points have to be elaborated in detail. Let's see what is mentioned in the answer. You check names entered in the student fee register for each month with the respective class register, showing names of the student on rolls and test amount of fee charge, and verify the operator system of internal check, which ensure that demands against the students are properly raised, means whosoever is still due to pay the fees has been called for. Check fee received by comparing counterfoil of receipt granted with the entries in the cash book. Okay. Then you confirm that revenue from its source has been duly accounted for. Next, total of various column of the fee register for each month or term to ascertain that fee has been paid in advance, or if there were any arrears that are irrecoverable and have been written off under the sanction of a competent authority. You check the admission fee with admission slip signed by the head of the institution and confirm that the amount has been credited to capital fund unless the managing committee has taken decision to the contrary. See that the free studentship, that is the scholarship, and concessions have been granted to person authorized to do so, having regard to rules prepared by the managing committee. Confirm that fines for late payment or absence, etc., have been either collected or remitted under proper authority, and confirm that the hostel dues were recovered before the student's account were closed and the deposits of caution money was refunded. Caution money, you understand, the security money which had to be refunded after the tenure or the period of education is over. All right. So these are the points that you have to mention. Out of these 7 points, any 5 to 6 points can be mentioned in the exams. Okay. Next question. You have been appointed as the auditor of cooperative society. During the course of audit, you have noticed some serious irregularities of the working of the society. Enumerate those special matters for reporting to the registrar. Now, what have you to check here? Any personal profiteering made by the members, any fraud relating to any expenses, purchase of capital assets, isn't it, or stores of the society. Then there were examples of mismanagement. Okay, and then there were disappropriate advances to vested interest people, vested interest groups such as relatives, and there was deliberate negligence about the recovery of the same by the management, isn't it? So this is what points you have to mention there. So they are saying special matters for reporting regarding the serious irregularities. See, number one, personal profiteering by the members of the managing committee, which are ultimately detrimental to the interest, means not in the interest of the society. It is prejudicial to the interest of the society. Fraud relating to expenses, purchases, property and stores of the society. In case of urban cooperative banks, disappropriate advances to vested interest group such as relatives of the management, and deliberate negligence about the recovery of the same. Cases of reckless advances where management is negligent about taking adequate security as to whom they are giving advances to regarding the credit worthiness of the party. They are not sure whether what is the credit worthiness, will he be able to repay it or not, and they are recklessly advancing money. Okay, so these matters have to be taken special care of. Okay, now coming to the last question of the chapter. Financial lease. Oh, important topic. P Financial Services is a leasing and hire purchase company. You as an auditor of PFSL are in the process of examining financial lease executed by them for equipment given on lease. Which point shall be noted by you while examining particular finance lease? So you have to mention that the lease agreement should be examined, taken into consideration the following points. What were the points? Description of lessor, lessee and equipment. Three things involved. Lessor, lessee and the equipment. Location where the equipment is to be installed. Amount of tenure of lease. Dates of payment. When is to the payment to be made? Late charges, deposits, advances. It should be all jotted down. Whether the equipment shall be returned to the lessee after the termination of the agreement, and who shall bear such a cost? It shall be borne by the lessee. Why? Because he is the one to return. Okay, and then whether the agreement prohibits lessee from subletting the equipment and authorizes the lessor to do so. So let's check the following points. The lease agreement should be examined and the following points should be noted. Number one, description of the lessor lessee equipment. Location where the instrument is to be installed. Okay. Amount of tenure of lease. Dates of payment. Late charges, deposits or advances should be noted. Equipment, whether it will be returned to the lessor on the termination of lease, and if returned, the lessee will bear the expenses. Okay. Whether the agreement prohibits the lessee from subletting. Subletting, you understand? Whether lessee is also giving it on lease to someone else. Okay. And authorizes the lessor to do so or not. Is it clear? So these are the 4 points that you have to keep in mind. With this question, we have completed all the questions of your chapter 9 as well. So I request, dear students, please go through the questions once they are uploaded. Revise all your answers. Try to write down and revise the answers and learn the answers if any problem is there. Please feel free to contact us. Okay, we will be happy to help you rather. Okay, but please make an effort of revising the chapter, revising the answers, writing the answers. See, revision is the only key. There is no shortcut. You have to keep on revising, and once you see you are revising, things will automatically settle down and you will be able to write your answers well in the exam. Okay, with these words, I would like to wish all of you all the best for your exams. May you all come out with flying colors. Please give your best shot in the exam. Okay, continue studying hard, practice hard, and do your best in the exams. Okay, with this note, I again wish you all good luck. God bless you all. And I think that's all for today. If nobody has any doubt, technical team, we can wind up the class for today. Okay. All right. Thank you, technical team. Good night.